This is Jordan with Conquer Trading and Investing. If you're new here, welcome. If you're not, welcome back. Looking forward to today's session. Headline of the session is quite unsensational. Could have went with the bullish case for Bitcoin 2035 is $2.9 million. Base case 1.35. What do we think about that? We're going to look at that today. It's going to be kind of love a little Q&A setting up over here. I'm going to go ahead and bookmark this one just so we get into a little bit of Q&A ahead. And we're going to, of course, cover our positionings. And a lot of my focus this morning is going on to the coming release of V4. So we'll check in with that quickly. And that's where my head is at this morning. And we're going to focus in on. I'm not really into the drama about what's going on with Cook and Trump and the ensuing course case. We'll figure that all out as it unravels. Markets obviously overnight on the news, very jumpy. Since have kind of, I think markets are more focused on tomorrow's Nvidia's earnings. We also have tomorrow. We have the two unemployment claims. Jobs matters. A little. They do matter. And then we have the preliminary GDP, not the events. That's the most important. Now we're up to the preliminary. Boop, 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 boop. I like when I go on a rant now that you could actually like see the facial expressions and whatnot. I like that part a lot better. Notice we still got the bulls running behind us in the back. Fab, this is nothing more than just the pullback. Or is it the top? The top of what? That's the question. Great to be here with you all. Definitely like to go. Oh, and one little cool thing that I really want to take a look at with y'all today. So we'll do that. When I say cool thing, I'm referring to this. I like the depth that this offers. So we'll come back to that in just a moment. And we'll start off nice and easy and simple. Oh, wait, hold on. We're going right into the Q&A. So the thoughts on Ethereum being down 12% and NASDAQ only being down 2%, give or take. Listen, I don't read anything into that right now, and I'll explain to you why in 1 second. First of all, on Ethereum, we've been watching here the fight for the new all-time high. Ethereum tagging new all-time highs, unable yet to close above them. And you can see that we have this aggressive sell impulse line over here. It's an aggressive angle and something to watch. I mean, it's definitely in play. If this breaks, then we have a retest coming in of the previous breakout. This was the breakout right over here. And if we're able to shoot the moon, then we shoot the moon, or jump the shark, or is this jumping sharks or whatever. But the question is, what do we think about the drawdown in relation to the NASDAQ? And I mean, off of the April low, you're seeing Ethereum's up 227%. And the NASDAQ is up, what is the NASDAQ up off the low? It was a 30% pullback. It had to recover. And it's since had off the low peak over here, going down to the low, and you have 45%. So roughly an 8-to-1 ratio, which, you're talking about 12%, 2%. Is that an 8-to-1? Yeah, I mean, I don't know. Close enough, right? It doesn't. Ethereum's drawdown compared to the NASDAQ is not something that is much of a comparison, I think, at this particular point in time, specifically and especially with that massive rise off of the April bottom of Ethereum. That talk about an epic run. That is absolutely. You saw some potential Bitcoin whales moving potentially. I say potentially because I haven't verified for out of a strong Bitcoin position into Ethereum up here. I mean, it would have been something special had they done that off the April low. Then that would be something to talk about. Right here on the NASDAQ, I just want to point out we were watching the purple line as like early warning signal, close below it. We closed below it right over here on the 21st, and price was able, off of Jerome Powell's Jackson Hole endeavor, to go ahead and fade that quickly. And look, right or wrong, it's not the best. And the green line is obviously a sell impulse that matters. That's a technical breakdown. If, just like Ethereum we just looked at, if that sell impulse ignites, then a test of this area is likely in the cards. But I'm going to go ahead and just move this down off of here, off of this peak, where the low point, again, it was not the best. And the reason I'm doing that is simply because that's where we just retouched. That's where the market's paying attention to. There's not really that much space between the green line and the purple, but whatever. I want to get it right as best and most as possible. Let's keep going over here. And I mean, are we just seeing seasonalities being seasonalities so far? Again, over in the middle of July 15th, why NASDAQ trading all-time highs. We just kind of set the tone. We prepared ourselves for what could be coming into this period. So far, it's what's played out, including price making the higher high mid-August, as we just said that, listen, we would not be surprised if that happened. And in the drawdown, that happened, and we continue out. Just the only other color I will add, because this is a post-election year, it's not just through towards the end of September, it's through the end of October that we have some weak seasonalities to work our way through. A lot of people today are very aware of the seasonalities of Bitcoin in September. When we look at those seasonality charts, I would love to get one that's only like from 2018 to present, 2021 to present. I picked those 2 years specifically and on purpose, and that would be a good barometer of what we deem to be more of the ever-evolving, changing structure of Bitcoin. And nevertheless, historically, September, obviously, the only losing month for Bitcoin, -5% historically. And then you're looking at minus 0 point something percent for August. I mean, is September going to catch a lot of people off guard? I don't know. Oh, Bitcoin being 12%. That's something to look into. So that, I like that a lot. So one of the things that for me is an important thing to watch was during the 30% drawdown over here in the NASDAQ, Bitcoin only drew down 30%. That was something spectacularly special from the way that I view it. And the next time the NASDAQ has a drawdown, I'm very interested to see a correction, I should say, what the extent of Bitcoin's drawdown will be as well. Now, does that have to be a 20% drawdown, a correction on the NASDAQ? Could it be a 10%? Could it be the next 30%? All those will be markers that we'll look at. So I'm glad you brought it up today. And first of all, I'm going to say, I love that you brought it up. Let me go ahead and take a look over here, and let me just go, and a lot of ends today, and lots of love. So NASDAQ drawing down over there 4%, right, as noted, and then Bitcoin drawing down 12%. And then I just have to notice that there are lots of times, like coming out of the drawdown over here, 8%, and NASDAQ drawing down less, and that's like, so I guess what I'm trying to say is I'm glad you brought it up, in so much as that I can't get my computer to stop doing these funky things. I'm glad you brought it up, because that's something for us to really want to look closely at and pay attention the next time it happens. But I don't think that this is one of those times yet. NASDAQ corrects 10%. Let's check in where Bitcoin's at. NASDAQ corrects 20%, 30, so on and so forth. But just a 4% correction, and that's just, I'm going to call it noise. That's just my interpretation. All right. So love that you brought it up. Love that you brought it up. Bring it up again when we get into a deeper correction, and then we'll take a strong look at it. Very, very good. All right. So Number 2, positioning. Let's just cover some of our positioning over here. Tesla entering the market now. We're seeing, we'll do equities first, and we got TQQQ continues to hold here. Continues to hold. We love it. Ahead of NVIDIA's earnings tomorrow. I think that that's obviously good, bad, or indifferent, a catalyst for the market to do what it wants to do next. That's what I'm watching over here. We're seeing NASDAQ up 35%, TQQQ, sorry, up 35%. And Tesla just entering the market, and just getting ready to go over here. As far as our positioning, ETH rocketing back over here and up 22%, unrealized profit. Cardano back. Let's see how far away Cardano is from exiting the market over here. Cardano getting close, still holding on to this trade. And then we have Bitcoin bull runs still remaining in the market. And we're just seeing kind of during this, let's say, unfavorable period of choppy sideways uncertainty that we were looking to entering, and we've seen our positions go from, almost max to max positioned on equities, and even for a moment across Bitcoin and crypto. And now we're just kind of letting Ethereum run the show over here, TQQQ, and we're just kind of, a little uncertain with the markets, and let's see how far away we are from entering into some others as Tesla enters the market today. And then, so IBIT, not even close, right? While we're looking at IBIT, we'll look at MicroStrategy. A simple plan will go a long way, and knowing when to be in the market, when out, and on what side. Absolutely priceless. Does anyone run an option strategy around the MicroStrategy template? That would be super interesting. NVIDIA, look at this, is actually kind of special coming into the earnings. Is just looking at ST1, keeping it out of the market, which is super interesting. Just to give you an idea of the difference over here. So I'm assuming she's going to load. I'm going to have to refresh it. Thanks for smashing the like. Thanks for being here more. Much appreciated all the energy y'all bring. Are we looking at a potential head and shoulders? We'll take a look at Bitcoin very closely in 1 second. So looking here at Tesla. No, I don't want to look at Tesla. I'm trying to look here for, bring it up on the big board. NVIDIA. Bringing NVIDIA into focus. And I just want to say what would happen if ST1 was not involved. ST1 keeping us out of the market. And you can see the mega difference over there. 30% drawdown versus 20% drawdown. To, 3,200% return. This is only since 2020. What's it since 2021? Take out the mega devaluation. All right, still running the show over here. Looking good. Yeah, that's why we have a filter in here. And, right now ahead of earnings, you might be like, oh, I wish I was in there. Well, let's see what happens by the end of today. I'd rather be on the sidelines, wait for momentum to get us in. That's the difference of a mechanical system. And FNGU, by the way, this is our best performer. Unfortunately, it doesn't look like it here. And it's because of the symbol change nonsense that's taken place. FNGU is looking at also ST1 and CTM filter, keeping it out of the market as Bitcoin bull runs remains in the show. What do we got over here? 2025 to present. 2021. Get rid of the bull, the mega bull. Oof, that's not a good performance. Outperform, buy, and hold. Oh, it can be done. Look, this is a great segue into right now. So I'm going to go from positionings into CTM version 4, CTMX version 4. So in talking about version 4, first of all, I have to go to the very beginning. Just a mega shout out to the collective CTM Hive Mind, CTM 2.0, March 14th, 2022, an absolute game changer as CTM is dropped out on the community. and there were some mega efforts from so many, countless to name, but among them for sure Zuzu in the beginning, Reza dropping out the CTM filter, but Andrew, the first dev of the moat, the mother of all templates. Then we went fast forward to CTMX about a year later, dropped on the community, and that on top of CTM 2.0 added these three filters. Javier, the Javier volatility filter, Javier massive contribution, and then of course it was the Hive Mind doing all of the modeling, and absolutely just I got on my knees today and I was like, I can't believe, God, that I have the opportunity to work with these people. I'm so grateful for it each and every day. By the way, last night I wanted to share with you, my daughter was telling me, we were like, I was on like YouTube TV, and like they have like a news, and the news is so horrible always. And it reminded her, she's like, Dad, I remember I was like 5 years old, 4 or 5 years old, and in school every day we had to bring in a news story. So every day you would find good news. So like everyone comes into class and they're like, the sky is falling and everything is bad. And I'd be like, this man found rescued 127 dogs on the street and found homes for them. I couldn't believe she remembered that. I couldn't believe that little girl at the time that made such an impression. And anyway, I was just thinking of it because she shared it with me, and I wanted to share it with you. So then here we are today, and of course that the hive mind needs to be completely um just amazing effort. Um Cavi, and but the wizard here has for about a year and a half put in absolute tremendous effort and work running special ops teams, helping here with the modeling, the unbelievable. If you get a chance on the Discord, go ahead and tag the wizard, and just give a thanks for that massive effort. It doesn't really go short too often. It's a good question, and it does go short, but it's not running. It's mostly in the bear market likes to short, and zoom out over here. So you can see that like this is a mega drawdown in a bull market, and you can see like it doesn't buy on the shorts. Imagine it was getting chopped up, and these are drawdowns. Those are big drawdowns, no doubt. Even over here, and not taking the short bait over here, and but during a bear market with momentum kicking off to the downside, it is very active on the short side. Over here, I want to see where the date is going back to. So if you come back over here to 2020, be able to say that even here wasn't biting on the short side, rightfully so. And then you have during the madness, the global lockdown madness, it was indeed biting on the short side. So it's very picky. Like you need to be in a bear market for it to go ahead and be looking to attack on the short side. And I know a lot of MSTR shareholders. I'm included amongst them, and they've been. It's not a bear market. Momentum is not kicking to the downside. No XRP chart. It's not something that we're able to focus in on trade. It would be. There's enough volume for XRP. The thing is that we're not able to model it to our likings. We're looking for long-term performance. We're looking to outperform the best of the best, and we're looking for long-term consistency. And XRP, just the nature of it, like there was that SEC lawsuit versus two of the founders for distributing all of that coin onto shit. Like it rips up in price and then it's distributed into, and where it doesn't work for us. I think there's like three assets that I know of that don't work, or I'll say crypto, XRP, Algo, and I'm sure there's another, but XRP is amongst them. That's why. Otherwise, it would fit well. into the mix. Maybe even replace Cardano, but it doesn't work. Otherwise, it would. Otherwise, we'd be all about it. It just doesn't fit. Doesn't work. Um, Back over to do I got it lit up? All right, let me get off positions over here and back over to the MO4. And you can see that we got now, again, the wizard. Unbelievable. We have over here the release templates now, and that's what I'm looking at here for review. And I got to go back, and I'm going to get green over here. And there are a lot of people, by the way, who are convinced that XRP is going to be, I would say the chain or a major chain in the tokenization of the world. And I wish Ace were here. Ace, if you're on the replay, I know you spend a lot of time looking for now 18 months or so at the tokenization and what it may or may not be. And my own perspective is that, like, yeah, the SEC case versus Ripple probably kind of diminish the potential network effects that XRP could have had. Like, that was not good for XRP, but also the incentives are not favorable also. Like, they're just not favorable, where a lot of retail might be saying, hey, this is something this was a fair launch, and that's something I want to be involved in. And but there are people a lot of really smart people who believe that XRP is, what does anyone know the market cap of XRP? And they believe that, like, for example, this cycle going to $20 a token. And anyway, I look, some people, they can't consult other people's views, and I think that's just something you always want to work on. It doesn't matter if someone's opinion is different than your own. You always want, especially if it's different. If it's different, then you really want to consult it just to see if it helps you change your mind or affirm your own. Those are very, very important. Uh, no, this is for Bitcoin, Ethereum, Cardano, and Solana. Check this out. I'm starting here from 2023, from the very bottom of the bull market, and on purpose, right? So here's a chart. By the way, discretionary traders, you don't like me starting at 2023, or you don't like me consulting other people's viewpoints. That's up to you. I don't really care. Hit the thumbs down. See you later. Don't look back. We are surely not. This is from a discretion. This is called the unsustainable channel. The unsustainable channel, because it's not something that I believe is structure and or sustainable. Now you can see that we had that liquidity grab. We broke down below it, and it wound up finding the support zone a little higher than I marked it out, a few $100 higher, but it found the support zone, and it got back into the unsustainable channel, and has since held it. And maybe hold on one second. That could be good. I'll explain to you why in a second. Right now, it's currently testing a potential support of it. Let's go ahead and take a look over here, and you can see that marked down from that last wick over here. It's testing it today. I had that wick originally higher off of these touches, but it wicked down below it over here. You remember how we just looked at that wick on the NASDAQ, right? So I think that's pretty important. And you could say, well, we closed out from it yesterday, but well, this is what the market was most recently paying attention to. I think that works. That's what I'm going with, and I think this is an unsustainable channel, but maybe it's not. I'll explain more. So here we have Bitcoin breaking below our breakout. Remember, the breakout was over here. This is the breakout for the last leg up, but you had resistance, broken, and flipped to support. This is why horizontal is always late. $175 billion, and so times 7. Is it going to a $1 trillion market cap? I don't know. I mean, I don't believe personally in XRP or anything like that, but um there's this talk of Microsoft being gifted X amount of shares, and and like the shadow underlying. It seems to me a lot of these banks are currently making their own tokens. I don't see why someone like there's nothing that can't be replicated about XRP. I don't see why anyone would use them as the infrastructure. I for sure I've been wrong so many times. I don't know, and I could very well be wrong. And we'll see what happens, but I'm open to anything. Like maybe one day I'll be an XRP investor. Who knows? I'm not today. And V3 and V4 are all money management, and we're going straight to V4, rolling them into one. It was actually like in to get to what is V4. There's been hundreds of releases along the way. Like the Wizard is just absolutely extraordinarily like boom, 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 boom. Work ethic is that, and the that's why he's quiet on Discord. He's got his head down building all the time. But there's been a lot of just constant, like that's why. So we're just it's and V4 is nothing more than just an iteration of V2. So CTM 2.0, CTMX added additional filters. We were worried, is that going to cause curve fitting? We found out curve fitting is not an issue. Poor modeling could be an issue, but you want it to be fitted, not overfitted. You want everything to be fitted. And then on top of V2, on top of CTM 2.0, on top of V2, V4 is a plethora of money management feature. So it's the same strategy eternally with one layer and now a second layer on top of it. So looking at what is a breakout retest and now failing below, I'm just going ahead and no, I'm not doing that. I'm doing this. And I'm just adding off of that last touch over here. What could be a potential, whole number, $100,000. I think that's a big deal. $100,000 is, a place that you'd want to see defended. I don't think at $100,000 Bitcoin is even like fairly valued yet. I don't think there would be anything surprised if Bitcoin traded down to 100,000, 90,000, 80,000, or even 70,000 at this point. That would all be fine and dandy. So what is that $100,000 number though? I wonder, this is, I don't know. I think this is what I'm calling an unsustainable channel. And maybe we're going to change that in 1 second. Maybe I'm going to just throw it at you. You tell me what you think. But I wonder off of that one touch off of the breakdown you have over here then coming into around that level as well, 100,000. So there's and then you could see also the horizontal off of the mouse over there, and that might be a level of big interest over there. And whether or not that if that were to be tested, if it holds or not, I don't know. I'm just trying to throw out some awareness. I think it would be really bad to trade below right here, $73,000, $72,000. Below that breakout, that leg up, which was already tested once, that would be a massive de-risk. What is going on? Something is wrong. Taking out the April low and that massive bit of support, that's not right. What is happening over there? Something is absolutely wrong. So before I get into V4, which is all I want to do, is this new direction of channel is very slight. Let me find something to explain what I want to talk about and how I want to present it. My eyes. What's over here? This is good enough. This is not what I wanted, but this is fine and this is good enough. This is the bull market breakout, and this is the invalidation line we have watched the whole time. It just is really quick because this is not presented the best, but it's perfect. You all understand it because you all follow all the time. So this is, for example, back here, this channel, and then you notice it gains like a different angle, and then the final ascent, and then broke out from up there. That was the top, right? There, right there. Like that should make sense to you. Like this is the first structure, right? It then takes on a different angle, then takes on a final angle, and then that's it. And this has been the angle that we're in, the same channel as the original one over there. And could it be that unsustainable channel? I'm just asking a question. I don't know. But is that actually a second angle, even though it's not as elevated as in the past? Here's a channel. Here's a breakout. There's a second. And there's a third. Maybe. I don't know. But I'm always open to everything. And if this does hold here and continue to go up, then I would be wondering, maybe the sustainable channel, maybe this is a higher, so soft in the angle up, which is also, I guess, in the long term pretty good. It's pretty sustainable. But anyway, that's my thought, and it was off of what, more importantly, that the awareness I'm showing you off of that. But I'm open to possibilities, and I'm open to everything, and I'm here to figure it out in real time. I didn't get a chance to share this with you, and since I want to wrap it up with V4, let me just talk about, we've been watching and talking about the repo market, and now that we know that it's wound down, a lot of people like crisis. We're like, no, that's just like, it could be a while. And you heard on Friday, I don't know if it was before or after Powell's speech. Absolutely. I don't know if it was before or after Powell's Jackson Hole speech, but that day, a Fed governor was like, listen, there's still ample reserves and we continue balance sheet reduction. And I know in hearing that, I'm thinking, all right, well, I know reverse repo is getting very close to being drained as the Treasury General account is being filled up. And he's saying that there's ample reserves. And I know that as reverse repo gets down to zero, like, or what I thought I knew is that, like, no one really knows how much of, more reserves there are down there, I'll say. But it's not the bottom that we knew, or I knew, or have heard. And yeah, and I think this gives a very appropriate visualization of that. So this says reverse repo is bouncing along the floor, and reserves are gradually declining as the Treasury General account is rebuilding, but still we're in the abundant or ample, I get them confused, regime. And you can see over here, this was in September 2019 when they weren't ample and we did have a crisis. And you can see over here that we're kind of well above. Makes sense with the Fed governors. But I had to check with Grok. I mean, like, what's being included in that? And he talked about, for example, the Treasury General account. So when it's being drained upon from reverse repo, right? But TGA is rising, like, that's almost neutral from the way that this is explaining it, as long as that it's going into TGA and not funding the government. If it's coming from reverse repo and it's not going into a rising TGA, then it's draining those reserves. It also has things like commercial bank deposits. I don't see where it says that. I know I read it. You're gonna have to take my word for it because I looked at it. So anyway, thanks for being here. Appreciate that. Robert, I'm going ahead and I'm gonna go ahead and take a screenshot of this because I'm not gonna get it to it live. I'm posting it here. And tomorrow, please remind me if I miss. But here's a look at gold. It's just redrawing this coil that we're currently within. I don't think many people think, or anyone, that we could break out to the upside. But I mean, listen, gold is being repriced in real time, and it's been now overbought for the longest on record. I never thought it would be and maintain this type of elevation. Here it is. Yes, so we got that up for tomorrow, and it just would be even better if I put it on this chart, but I can't right now. So moving over and just checking out what's going on over here with this is why I got sidetracked like a cat. So in 2023, this was the bottom. Now, up and to the right since. Buy and hold, and if you know when the bottom is and you know when the top is, it used to be said that you can't outperform buy and hold. Like if you know when the very bottom is and you know when the very top is, how could you outperform buy and hold? Number one. Number two, yes, we called the bottom 17,250, except that we had no idea that we would still be up over here. It's why we have that trend line, which is off of the bottom of the sustainable channel. Check this out. This is all we did. You ready? And this is good because we just went like this and we're like the whole time from the very beginning of calling the bull market breakout, we didn't know when it's going to end. And if it broke this line at any point in time, we said it came to an end. That line happens to actually be this line right here over here. And it's the same structure. And it actually happens to be a 60% CAGR. Is it a coincidence? You can see this line right here, this dotted line between the solid and the orange over here. That's that line I just drew. Okay. And that was the invalidation of the bull market for us. It still holds. It hasn't been invalidated. And if you could know when the bottom, the exact bottom, and the exact top were, it's impossible to outperform buy and hold. So we thought. Check this out. This is from 2023 till present. And so this is buy and sell side though. And with buy and sell side, you are outperforming buy and hold as buy and hold is up and to the right. Now, if you were looking at this in April after Bitcoin had drawn down 30%, obviously it's going to look a little bit different. What happens if it was just the buy side only though? All right. So if it was just the buy side only, now you happen to be outperforming buy and hold by a small margin, but you are outperforming buy and hold. Or if you were just matching buy and hold, that would be an extraordinary accomplishment. If you could just match on buy side only, buy and hold, buy and sell side, you're beating it. Buy side only, you are matching it. I mean, you happen to be beating it, but you're matching it. Now, what happens if I include from 2020 buy side only, not buy and sell side? So buy side only, adding in what like a bear market, and I don't think a bear market is going to be 76% going forward, but I think we'll have bear markets, and it could be 40, 50, 60% easily. Look at this now. Now you have buy and hold at 202% versus buy side only 800%. CTM. Now, what happens if you were trading the buy and sell side during that bear market? Oh, the drawdown's unbelievable, right? Look at here. Look at CTM. This is going to help over the next, the next 2 years, the next 4 years, the next 8, but over the next decade, help. Oh, this is good. This ties us back in the end to what the theme of today's session was. This is really good. It's going to help everyone here go beyond what was believed and expected for them to be able to achieve. This is Ethereum, same time frame, looking at the bottom of this bull run, 2023. Obviously, tremendously beating buy and hold as Ethereum is just recovering. If you were to enter in some type of bear market, take a look at it. Absolutely destroying. And in a little bull love over here. So Cardano, it's okay, right? This is from, again, the very bottom, 2023 till today. It is beating buy and hold. Trump definitely threw a time bomb in over here with that completely reckless tweet and whatnot, but still pretty good and still worthy to remain within our quiver. And then Solana is again, this is just performing with buy and hold over here, very close to it. Obviously looks a lot different when Solana would be like if I came down to this date over here. So let me come down to June 23rd. Look at that drawdown. So I wanted June 23rd. There you go. No, I digress. And that's because that open position is being held. It's counting for the open position right here. No. It says June 23rd. I don't know. But this is where my head is at today and all morning. And I'm going through a massive, thorough review because as the wizard has been able now to get to what is the release, it's now a question of making sure that this is really looked at in depth and thoroughly across the board. And we are just, I mean, right on time of when we were hoping to get the final release out to everyone. It's going to make an incredible difference for all of us as CTM. And it's absolutely not. Oh, it's 2023. Thank you. Thank you. What's it thinking? What's going on? That's the start date. There we go. That's the problem. No, hold on one second. You did find the problem. So I wanted the end date to be right there. And that was the difference I was trying to point out. Thank you for finding that out. Oh, but from 2023 start date, not even there. So not 2022. From 2023, you saw that Solana was on par as 2023. Here's the difference if you're in, because you're up and to the right, if you're in any type of drawdown, obviously knowing when to be on the right side and when out is absolutely everything. So we do have, PC Friday. I'm glad you brought it up. And that's obviously an important one. Market's very focused on it, or the Fed is very focused on what the inflation's picking up. Inflation's picking up. If they're able to lower rates, if they wind up lowering rates, not if they're able, if they wind up lowering rates, and if they're able to actually continue to keep this thing running and actually pick up steam and run hotter, inflation's going to be going up. It's going to be going higher. But it's going to go much higher before it becomes a problem. And not only that, the problem comes when inflation is going higher from looser monetary policy, a strong economy, once the growth slows down, which it will. And once the growth slows down and those elevated inflation is higher, that's when it's become, I don't know when that's going to be. If I had to guess, I would just say much, much later, not even close. I don't know when that's going to be. First, let's see if they're able to go ahead and begin to pick up steam here. Then let's see who wins the midterm elections, because depending on how that election goes, likely so does what happens with the economy in the near term. So yeah, I think or even an up or not. Who knows? Well, I don't. Who knows? That's what the value of a mechanical system is for sure. A lot of people looking at the VIX and a little worried that it's becoming at low levels. Maybe there's a little bit of complacency out there. I don't think so personally. I think that anytime you're looking at it, here it is right now, getting close to 14. And anytime it's been under over here, you can look at the bottom, seeing the S&P moving on up down in this area over here. Is very, very favorable, very favorable. Now, maybe if it gets very low, you know, is that a moment of complacency? It could be leading up to something, but looks good. I mean, this is the direction that you want to see it going, at levels you want to see if you're looking for this rally to continue. And it just reminds me of what happened over here. You know, look at this. Then we're looking a little later, by the end of October this cycle. We want to see by the end of October us to be able to continue the rise up, or at least that's my expectation. Is there a lag? Many more than months. If you had to ask me when I foresee inflation becoming a problem, and I think inflation is going to, now, of course, there could be an actual, and I see this in motion. I could see a year from now the housing market being worse than it is today. That's the trend. And you could see inflation, like temporarily, even, coming down from where it is today, or staying close, or anything like that. But if they're able to actually pick up steam and run the economy hot, which they're trying to do, if they're able to do that, fast forward 2027, 2028, 2020, 2029, in the future, as the growth slows and the inflation is going to be higher, much higher, it's going to become a massive problem, which kind of brings into light what's going on with Bitcoin. So let's also look at what's going on with Bitcoin. And the title of this episode is we're seeing that Bitwise is projecting that their base case is $1.3 million for 2035. The bullish case is 2.9, and the bear case is very low. What's the bear case over here? $88,000. That seems, with a projected CAGR of 2%, seems very low. So their bullish case has a 40% CAGR. Their bearish case, 28% CAGR. I mean, their base case is a good base case if you want to be right, I think. Let's check in first on the power law. Power law for 2035 has, I guess their bear case of 88,000. Well, that's off the map. I forget. Let's go with their base case of 1.3. That seems to be pretty close to the mean between the floor of the power law and the midpoint. So that seems like a good base case to be throwing out there, and I think that's a good base case, right? I think that we're going to hit that base case. I don't know what it'll be in 2035, meaning that we just talked about like a lot of people have been expecting a lost decade to have come for the past few years. Meanwhile, we're looking at, the last 2 years have been absolutely extraordinary back-to-back gains. But if we run into that stagflation in the future, we could have a lost decade. And lost decade is not just sideways. You're seeing some, remember 2000, 2010. And if that's happening, Bitcoin is not immune. Right? Now, of course, it's depending on adoption and devaluation. And I expect that there's going to be between now and 235 at least another massive devaluation and maybe two, and that's not good. And when that happens, obviously the expected price is going to go even higher, but the purchasing power is not. I'm not trying to have that conversation right now, but throwing it in there so you know. Well, you're talking 10 years from now, and 10 years, a lot could happen. And one thing that I could foresee happening is the next few years, and I only try to go through a couple of points. I'm talking about between now and next summer. And I think that's a long time. And then I'm throwing out the midterms as an important inflection point, and then like the next few years is one thing. Trying to figure out what's going to be happening 10 years from now. That's so far away with so many variables that are unknown. It's impossible. But I'm trying to point out to you a situation where what happens if between now and the end of the decade ish are pretty actually strong. Odds are we see what is our base case really in play, and that is along the lines of that walk up and higher portion of the deviation. 1.3 likely hit somewhere around 2029. I believe that it's possible, it's in play. 2030, definitely possible, definitely in play. Now, from there, though, it's possible we do hit a, a big problem. I don't know if that's stagflation. I don't know if that's deflation. Deflate, it could get bad. There's no question about it. So trying to project to 2035, that seems very, very difficult. I think that their base case is pretty spot on. I'm gonna go ahead and look at it from this, by the way, is a 50% CAGR, which is a lot lower. Yeah, it's about 50% CAGR. And it puts in, just so you know, by the end of January 2030, somewhere around 114. Guys, I'm so wrong if that happens. My own personal assessment of what's taking place and happening if that were to happen. 2035, I mean, it's very low. That's a 50% CAGR, though. What I think happens, obviously, in the near term, and I think it's the green and sustainable channel is what's in play. This is 70%. This is through 2028. I think that's pretty far away. And let's just look at the bottom here, where price is spent the least amount of time in this area. That's suggesting 462 Bitcoin by January 2030. The mean line of that is 630. I think that those are safe bets, but I think that what happens is that we continue to hold that massive green angle and that we actually walk up by the end of the decade. And here you could see 130, right? And that's the trajectory I think we're on. I don't know real honestly what happens beyond that. I'm trying to make it between now and next summer. A lot of people are looking at this particular moment. A lot of people I know and respect looking at this moment and saying the top's here right now. We have 60 days. The clock is ticking. The top is in. You know, maybe we break the sustainable channel. Maybe the top is in. We'll have to, that would be a major de-risk event if it were to happen. I don't think that's happening. I think that, again, a lot of people are going to be calling for Q1 2026 for the top. I don't think that's happening. Summer of 2026, I think we have been proven correct. And I think that everyone will have, at that point, have no choice but to talk about the ever evolving changer of what's taking place. Well, that we can't really go into 2035, right? I think that for me, for a long time, we were trying to look, guys, 3 months ahead. How can we look further? And now we're kind of evolving that a little bit. Now, listen, the macro could change rapidly, and if we see some sharp changes, we're going to have to pivot our expectations of what we think's taking place. That's why we show up every day. That's interesting. I'm not sure if that's in play or not. And how hot it would be. Let's take a look at what the expectations are. You're right. I haven't seen anyone talking about that. It hasn't really been on my radar. And let's go ahead and try to jump in. So I mean, I suppose I could argue that the forecast is actually a little bit elevated, right? We've had readings lower. This is now ticking up. Uh, if it comes in as per expectations, is that hot to begin with? I'm not really sure. Let's go back and look at the PCE chart. And so if you get a reading higher than forecasted, do we have like a broadening channel setting up? I'm not. Yeah, I mean, I think we're seeing inflationing for now. Not only having put it in a bottom, but ticking up. But I don't think it's like going to become. I think the tension is whether or not which becomes more of a concern. Is it the inflation or is it the job market? And I think that right now, uh, the Fed seems to be headed in the direction of getting ready to kind of give up the fight on inflation and allow it to continue to run hotter. And I think that, of course, we just mentioned something like the housing market could bring that down going forward. But I don't think that we're going to see this ensue right away. Maybe on that timeline, but not like this. That's not what's ahead. And it could take a year easily or more to get back towards 3.5, right? That's the way I see it. This is very clearly how I see it. They might not even stop QT now. Looking at this and just I thought at Jackson Hole they're stopping QT. Could they low? Yeah, they already lowered rates and continued running QT. This gives me the impression, you know, recent Fed speak, reserves are still ample to continue running balance sheet runoff. It's not that much. This to me visualizes better than reverse repo. I think it's right. I think it's accurate. I could see that happening. Um, and whether or not they cut, we have again, it was mentioned jobs on Thursday, unemployment claims on Thursday, PCE on Friday. We got another non-farm payroll coming into the market. We got more CPI data coming into the market. So we got more readings up until we get to the Fed, and then we have the major revisions coming in on September 9th. So I think the market obviously leaning towards that cut right now, but I think it could go either way. I really do. I'm not convinced one way or the other. And as I said, we won't make up our mind until the data comes in. That's all. Everyone, I thought it was going to be super short and sweet. Normal session. Lots of love, everyone. Have a beautiful day. God bless you. And I'll see you all back on the inside.